All right, hello and welcome everyone. Doug here with the LincolnList.com, and let me welcome you to another edition of Stock Market Mutterings, where I always say this is where I will do my very best to take a grope in the murkiness, try to make some sense out of the stock market for you. And whatever I discuss here, I hope puts a little bit of money in your pocket. Now, if you guys need some help with your personal trading, somewhere on the link will appear a screen. Each day that the market is open, you are welcome to join us in our live trade room. So we've got a lot of stuff we got to talk about today, don't we, guys? Don't we? And I'm going to do this in a couple of different segments. Obviously, first, I'm going to address the elephant in the room, which is Trump and his COVID, his hospitalization over the weekend. How is that going to impact our trading and what we can expect to see from the market at the beginning of the week? I'm also going to talk about some stocks that I did some specific YouTube videos on this week. Stocks that I highlighted and stocks that we traded and did very well with, and stocks that are still doing good in a chaotic market, which was NIO and DOCU. So I'm going to go into a little bit more detail about those. Plus, we'll talk about some other stocks that I've been looking at over the weekend and what I expect here. So let's first talk about Trump and the COVID. Now, we got a taste of how the market may react to a situation like this. When his diagnosis came out, you had a pretty good panic. Let's just call it a panic drop here. A nice little panic drop Thursday evening in the futures market. And then when the market opened, it's kind of done what it's done in so many of these other cases, like the Brexit, the election, and other sort of news stories. It just seems to shrug it off and started just becoming a buy the dip frenzy. I mean, that was the first move that we saw on Friday. It was a great opportunity to buy the dip. Many of these things went red to green. I mean, you don't get a whole lot of straightforward setups like that every day. So it was a great opportunity to seize a knee-jerk reactions to the market's news. Now, the other thing about it is one of the things that we've been talking about in these mutterings and the videos that I've been doing is how this tempo in the stock market continues to change. And that means it just doesn't build like it used to. It just doesn't keep ripping. Now, you're going to have 1 or 2 days that just go bell to bell of just melt up rallies and runs. But for the most part, you've been getting a lot of action in both directions. We weren't getting the both directions action over the last couple of months. It was just kind of straight up every day, and the dips were very minimal. Now that the volatility's back in, you're seeing a lot more erratic nature to these. But normally in a situation like this, what we have experienced in the past is not only these stocks rallying back to green and back to high, but then just blasting through high, right? That's always been the story here. We didn't get that. In fact, Friday was just sort of a rollover, especially in the Q sector, the NASDAQ. I mean, it just melted away and kept on going down after hours. So, I mean, this was a pretty intense, I'm going to say intense. It was a pretty intense sell-off considering what the market had done. I mean, it was wild action on Friday for sure. Now, when Trump's hospitalization came out, that was something that happened after the futures market was closed. So we have really no idea how the market is going to react. Now, there's a couple of, you can look at it as good or bad, how the market would react. In a case like this, when the futures market was closed, then you may be absent of a panic sell-off. Now, investors, traders have had a couple of days to think about this. Some more news has come out. The health conditions improved. Maybe it's not as bad of a pullback as one. Who knows? Maybe we rally. It's really hard to tell. I think even without this issue, what I've been really pounding the table on lately is how this market keeps leaving around clues that it's not the same market we were trading a couple of months ago. This is not the buy the dip, let me go back to all-time highs market. Now, maybe, in the end it will be. At some point it will bounce. At some point we'll see a rally. But I think it's premature for us to say that, it's just going to just shrug everything off and just be the old market that we have. And it's understandable if you really look at what's happened around you and what is going on in the marketplace. It first starts out with the tempo of how the market no longer rallies past the highs. It just sort of stalls. Now, there's individual names. I want to make something clear. I'm talking about the market. And what happens is it becomes a stock picker's market because the stocks that you choose, they can run all day. So you're going to have to, it's not going to be like dart throwing where you can just pick anything. And let's just be honest, in August, July and August, that's the way it was. You could just throw darts, put away your chart, start throwing darts, and you're going to be all right. Can't do that. This is where your skill pays off in picking the right names and taking advantage of those moves. Now, the market itself doesn't feel that way. It keeps continuing to sell off rallies. That's number one. It does not stick rallies. The flushes are coming deeper and longer. So we had this initial 10% correction. Initially, market bounces back in this knee-jerk reaction, but like we've seen in the past, which I keep talking about, is after that happened, the market just shot straight back up to highs, and then it went through all-time highs. It's not doing that now. We're going kind of sideways here, and then we're selling off more. And then, of course, Trump's news does not do any sort of calming nature to the market. Some traders and investors might have different opinions on how the debate went, or whether that sort of moved the needle on the market. I don't think so, but everybody's entitled to their own opinion. And, of course, you have this major election coming up here in November, and it's just historically this time of year is a little bit bearish. I mean, you got a lot of things that are pressing in that direction. That doesn't mean that we can't just wipe it all off and go back to all-time highs, but it just feels like right now the market is not ready for that. It doesn't mean it's going to crash. We may stay in a zone here and get chopped around for a while, or you never know, it just may get a lot worse. So if we kind of open up the SPY a little bit, I think the first issue that we've really got to look at is going into the gap fill from a few days back. I think this is 328s. Yeah, the 328s here. You got to look at this gap fill here. It's just holding on to the 10 moving average. I think you've got to hold that. You know, if you have some support there, then maybe this is just a back and forth choppy market like it has been over the last couple of weeks. If that doesn't hold, I don't see any reason why we're not down at 319s. And depending on news events and other kind of stuff, we could even go a lot lower. But I still feel like we're going to stay within that 319, but maybe we don't. You know, for me, it's a week by week thing. I mean, look at the action during the course of the week. It looked like they're at one point, you know, just kind of like sucking people in. That's what I keep talking about. What the vibe feels like. It feels like it keeps sucking people in and sucking these traders in, because it looked like maybe Wednesday or Thursday, it's like, okay, we're back to being bullish. We've had a couple of green days, you know, the whole bull rah thing, and then it's like, there you go, wiped out. And of course you can make the case obviously for Trump's coronavirus results there. That didn't do any favors, but then once that was out and the market bounced, the thing was it couldn't rally on that. So it's really, really important that we pay attention to that. Now, there were a couple of stocks that I did talk about. The first one I talked this week, I did specific videos about DOCU. This is a good stock, and this is a really big move. It moved about $8 from the mention. The thing you have to do in this market when things change in this climate is you can't just sit on shit like you used to a couple of months ago. Again, you could throw darts in August, sit on it, and just count your money every day and then go have a sandwich. You can't do that here. The market will change on a dime. Its reward does not reward any sort of ignorant behavior or sloppiness. I mean, this is where your discipline, your skill set, this is where it comes in to continue to get paid in this stuff. So this was a great trade. And I think as we're going further with more COVID plays, I'm probably going to do a more in-depth video about this a little bit later. But I think the days of everybody going, putting the suit and tie and going back to an office structured environment where you're elbow to elbow with everybody and working in those, I think it's done. These places like ZM, like DOCU, these COVID plays, work at home plays, I think we're going to see new innovation in that area. But that's something a little bit different. I think they're always going to be strong, just like ZM. The other one was NIO. Like I said, you always have to have an EV play. It's like if you own some Bitcoin, you're a speculator, you own some Bitcoin, got to have some EV play. It's a good move. It is a good move. The thing that's irritating about NIO, though, is it just, unlike these other cheap stocks, they just sometimes just go parabolic and just run away, just keep running away, just steamrolling shorts. This thing just kind of pops and just takes its time. But both of these worked out good. And this is what I keep talking about, stock pickers market. You're going to have specific names that will perform well. No matter what the market is going to be crashing, there's going to be sectors, there's going to be individual stocks that will perform well. The thing you have to do in these situations is one of the things traders have a tendency to do is think that every market day is going to be the same as the previous market day, or the market climate's always going to remain the same. And part of being really successful is adapting to the current conditions and just kind of going with it, like summer, winter, fall, and spring. You just sort of have to live right through it. You live in the rain, you live in some snow, you have some hot days, cold days. You just have to deal with that, just like the changing of the seasons. But this is a market where stock picking is going to pay off, and you still have to take profits. If you have something that's good, you can't just sit around on it because you just never, ever know. You don't know. You don't know right now. It's a touchy market. It's sensitive to news. So both of these that I did on YouTube were good. The only real issue with it is only a few hundred people watched that. Like, what the hell's wrong with you guys? I mean, I dished out some serious juice on both of these. I mean, come on. I mean, if you're still hanging around now, what else do you want from me, man? Okay. So those were good. There are a couple I want to look at. And I got to say, I'm talking about from trading. I'm not talking about swinging here or holding some overnights. I'm just talking about some quick hits in and out. These real estate stocks, this Zillow, it's like, what? I mean, you're getting good news in the real estate market, but God, this thing is a monster. Any dip, I'm interested in just scalping. Obviously, the daily chart's hella overbought. Let's not be delusional about it. It's overbought and it's seriously due for a correction, but maybe some small scalps on a dip. I don't know if I'm quite ready to short that unless the market really gets dirty. And I like Roku. I'm going to continue to mess around a little bit here with Roku. Chart looks good. It's already broken out. You got to be touchy with these one. The daily looks like it's got momentum. They are a little bit stretched and they are working well, but I'm just interested in buying dips. Again, my other was DOCU, NIO. I'm still with this. I love me some DOCU. I love me some NIO. I love me some Roku. I like Zillow. And you guys know I've been in Peloton since the freaking 20s. I'm always going to love me some Peloton. So I think those group of stocks will continue to perform well, especially something like a Peloton when we're talking about COVID plays. That even if things open up, people are not going to be so enthusiastic about going back to the gym where it's like a, petri dish for bacteria in a place like that. So anyway, those are just my thoughts. Let's see how things work out Monday. If we hold those earliers, then maybe the market can work through the jitters here and move a little bit higher. I'd really pay attention to that I think it's September 25th level, the 329. Really watch that thing. If you have trouble in that area, it is going to trade most likely down to the lows, whether you like it or not. And depending on other things that may happen, it could get dirty. You've got to be careful here. There's a chance it doesn't, but in the situation where a market's this sensitive, you got to be careful. You got to pay attention to what you're doing here. Or you're going to get barbecued. Anyway, guys, thanks for watching this video. As always, reach out to me if you have any questions. Support at thelinkenlist.com. Thanks for watching. Trade well this week. Talk to you soon.